Hey, I'm Jeremy Drobeck with Treadstone Mortgage, and I am here today to talk to you about HUD homes. And this is going to be I've done a lot of HUD homes over the year, and we wanted to put together a presentation that realtors and home buyers alike could view and get an idea of what options are out there on HUD homes. And so we're going to cover that today. And I'm just going to kind of get rolling here. I've been doing this in conjunction with Richard Stewart. Richard Stewart is a HUD listing agent. He lists some of these HUD homes here in the Southwest Michigan area for sale, does a lot of foreclosure stuff, and he's going to help spread the message here to homeowners out there on how these HUD homes work. So thank you, Richard, for promoting us, promoting this HUD home program. It's a great program. All right, as I mentioned, I'm Jeremy Drobeck, and there's my contact info if anybody would like to get a hold of me for pre-approval or additional questions or anything like that. Just give me a shout. I'm here to help. All right, so what we're going to do today is we're going to cover HUD homes. We're going to talk about what a HUD home is. We're going to talk about different loan program options that are out there, and then some real specific special financing options for these HUD homes. So a little bit about myself. Been doing this a long time. I mentioned that a couple of minutes ago. Actually just hit the 23-year mark in the industry. So it's 2023 here, and I've been doing this since 2020. One of the top 1% of all the loan officers out there. Just do a lot of business. Helped a lot of people get keys to their homes. So I've also got some experience as a property investor. I had 15 rentals at one point in time. So I had my real estate license for a little while. So just worked all aspects of the business, which has really given me a good handle on how to structure deals like this. During the foreclosure era, this was back in the '08 era, right? So there was a foreclosure like on every corner, and they all needed repairs. There was tons of these HUD homes out there. They'd come on nowadays they come on the market and they sell right away, but back then they sat on the market forever. So we had to find a way to make money in that environment, and one of the ways that I did that is I figured out how to do these distressed properties and these homes that need some love and need restored. So that's what we're going to talk about. All right. So first, let's cover definition of a HUD home. So a HUD home is a 1 to 4 unit residential property that was acquired by FHA or HUD basically through foreclosure. So basically, somebody came in, had purchased the home originally using FHA financing, which is a government-backed loan program. It's a great program, low down payment. They're pretty lenient on credit. And anyways, that person then got foreclosed on, so they didn't make their payments. They lost their house, and the house is being resold by HUD, and that is what we call a HUD home. So HUD's goal is to recoup as much as they can on dollar wise on the house when they sell it. All right, so more specifically, you can find HUD homes here on this website, HUDHomestore.com. So if you're looking to purchase a HUD home, go to HUDHomestore.com, put in your area what you're looking for, and they'll come up. Some areas have a decent number of them. Other areas, like I'm in Kalamazoo County, Kalamazoo County doesn't have many of them right now. There will be one, and then a couple weeks later it'll sell right away, and then a couple weeks later there will be another one that pops up. But if you don't see anything there, just keep checking it because they definitely come and go. It's just you got to wait for one of these foreclosures to hit. So, but HUDHomestore.com. All right. So I want to real quick talk about some of the paperwork involved with HUD homes, and your realtor is going to help you with this. So really, the first step is get pre-approved, and then you're going to put an offer in. And I've got this slide in here for the realtors really that are watching too. But if you go under contract on the house, it's going to ask what type of financing you're doing as a buyer, or if you're a realtor putting in an offer, what type of financing they're doing. If you select the wrong type of financing, it's not the end of the world. It can be changed around, and this form that you're looking at here is the one that would do that. So we're going to talk about these different programs, but here's some of the programs that we can do on these HUD homes, the 203B with a repair escrow, 203K. I bring this up in the beginning because I've seen a lot of these where they hit my desk kind of after the fact, and the program's kind of already been selected with HUD. It is possible to change it around if we need to. So, all right. So let's keep going here. So the problems with HUD homes, and I think probably more so than anything, the need for this is there's a couple things you run into. So number one is appraiser required repairs. These are foreclosures. A lot of the times they sat vacant for a long time. Other times people were just mad they were getting foreclosed on and destroyed the property. But for whatever reason, a lot of times there are repairs that are needed on the house. And that's definitely a challenge when it comes to foreclosures. Another myth I hear out there a lot is in regards to closing costs. I'll hear people say, it's a foreclosure, we're not allowed to ask for closing costs. That's just simply not true. I can tell you HUD will pay 3% towards closing costs. They won't do a penny more, but they will do 3% all day long. So if you're a buyer putting an offer in or a realtor, you can do up to a 3% seller paid closing costs in that offer. All right, so let's get a little bit more into the loan programs. So this is going to give us a real quick rundown on loan program and options. And I want you to pay attention to two main areas. Number one is the down payment, and number two is the repairs. So conventional 3% down, and repair-wise, this is going to be the more lenient on repairs, but they can definitely still come up. We can do an escrow on it. I do have a larger down payment conventional. That'd be like a 5+% down where we could roll the repairs into the loan. So there's a couple options there. The 203Bs, we've got just a regular 203B. That's like a normal FHA. Super cool. We can do it with $100 down, and we can escrow for repairs if the borrower funds them. But with HUD, there's another one where we can roll it into the loan up to $10,000. I'll get into some more detail on these. The 203K, we can roll anything into the loan repair-wise, pretty much. We can do that with $100 down. So look, this is just, I think this is so cool. Look at how little somebody needs to be able to purchase a HUD home. You don't need a ton of money to get into these things. Okay. So here's the programs we're going to cover. We're going to talk about conventional. We're going to talk about the couple different FHA options out there, rural development, and VA. So let's dive into the conventional first. First off, a lot of people think if they put a conventional offer in, they're guaranteed not to have any repairs. That is false. They're more lenient on repairs with conventional, the appraisers are, but at the end of the day, if you send an appraiser out there on a conventional and you got a tarp on the roof or water in the basement or some major health and safety issue, it's going to get written up and it's going to be required to be repaired. So not a big deal. Again, we can handle it, but we got to make sure we got it handled. Typically, we don't need the utilities on. Other than that, I tried to put some kind of bullet points on here that maybe cause us problems, but if it's a real low down, every now and then we'll have it where the mortgage insurance company needs to sign off on it too. That means they got to clear any repair concerns. So 3% cap on seller paid closing costs. So this conventional loan available at 3% down plus, so 5, 10, 15, you can do more down and do this conventional. Typically, we're doing conventional loans for buyers with some money to work with and good credit is what it comes down to. So, all right, then we get into the government loans. On the government loans, that's like your FHA, RD, VA, MISHDA, and going back to this repair thing, because again, it's a real thing, like having to deal with the repairs on these foreclosures and HUD homes. But FHAs on these government programs, they're going to be more picky than the conventional on the repair stuff. So I have some stuff on my website, firstclassmortgageservice.com, where you can see a list of possible appraiser required repairs. But with these government loans, it's going to be busted windows, missing light fixtures, the major stuff like tarp on the roof, water in the basement, peeling paint's a big one. So if we have any health and safety issues, they'll get written up. With the government loans, we got to have the utilities on. Same 3% seller pay closing cost cap. Those government programs allow for more, but HUD as the seller will not do more. So 3% cap on closing costs. If we're doing the MSHDA option, that's a down payment assistance in Michigan. I cannot give any post-closing repair options. So basically the house has to be clean and no health and safety issues in order to do a MSHDA, because the seller won't let anybody fix anything prior to closing. All right, so let's run through a quick example here. This is a $100,000 example, and I just noticed an error on my slide. I'll point it out, but let's say we got the conventional, and that's conventional 5% down, so $5,000. We got closing costs $4,500, and we're just going to say we got $1,500 in repairs. We're allowed to get 3% seller concessions. That's where my math's wrong, so that would be $3,000, not $1,500. So $5,000 plus $4,500 plus $1,500 in repairs, minus a credit of $3,000 from the seller, means that the buyer would need to come up with $8,000. So $8,000 cash to close. That's wrong on my slide, but nonetheless, $8,000. The cool thing about this is this $100 down FHA. So we can do an FHA loan with $100 down on these HUD homes, and so you end up in, same thing. So $100 down, $4,500 in closing costs. We're saying we got $1,500 in repairs, and we're getting 3%, so $3,000, again, bullet points wrong, but $3,000 back from the seller. So we need $3,100 due at closing. So basically, you got one scenario on conventional where you need $8,000, and then you got another scenario with FHA, because we can do the $100 down, you only need $3,000, $3,100, and so it works out much better from a cash to close standpoint for a buyer if we can do FHA. So FHA is a great way to finance these. All right, some more on repairs. So you got repairs. We get hit with some repairs, and we're going to dive more deep into these repairs, but we get hit with some repairs, or we know we're going to get hit with some repairs. What are our options? So if we're doing a conventional loan, we can do an escrow. Same thing, I guess, with VA. We can do an escrow for it. But basically what an escrow is the buyer gets a bid from a contractor, and then we close, and the buyer pays to fund the escrow account. And then the work's done after closing. They get 2 weeks to do it. With the renovation loan, we got 6 months to get the stuff completed, and we have to do the required repairs, but we can do other repairs as well. So the first thing you want to check is when you pull that property up on the HUD Home Store, you want to go on there and look. It'll pull up the property, and then it'll say if it's you'll see this IE insured escrow or UI uninsured. If it's an insured escrow, with FHA we can roll the 10,000 or less in repairs into the loan. If it's uninsured, it means it has to go 203K. This will all start to make a little bit more sense, but that's real important when you're looking at those on the HUD Home Store. So repair escrows. Let's get into more on how these repair escrows work. I know I've been pretty vague on this so far. So we get the appraisal back, and this slide kind of gives you the detailed version, but basically appraisal comes back and the appraiser requires some repairs. And let's just say that, just for the sake of saying, let's say we got some painting that needs to be done and maybe a water heater that needs replaced. So we would have the buyer get a bid from a licensed and insured contractor to replace the water heater and take care of the painting. And again, just to use simple numbers, let's say that that bid is $5,000. We're going to take and close that loan. So we close, the seller, in this case it would be HUD, the seller gets paid, they're out of the picture. We close, and then the contractor has essentially 2 weeks to get in there and get the work done. Then we re-inspect the property, make sure everything's done, and then we pay the contractor. Now the question on these repair escrows always is, where does the money come from, right? So they get the bid, we approve the repair escrow, and here's the deal with where the money comes from. If it's a conventional loan or a VA loan, a non-FHA loan basically, RD, the buyer would need to fund the repair escrow, and we hold 1.5 times the amount of the bid. So if we got a $5,000 bid, we're going to need $7,500 extra from the buyer. We're going to close, and then again we'll pay the contractor once the work is done. If assuming the work still stays at $5,000, the buyer would be refunded that extra $2,500 we hold. If it's FHA financing, because it's a special financing program on these HUD homes, we can roll the money into the loan. So we can take that $5,000. In that case, we'd roll an extra 10%, but we'd roll that into the loan, close, the work would get done. And then for FHA financing, so that FHA 203B with a repair escrow, we have 90 days to get the work done instead of 2 weeks. So it's a great option, but it's, you know, that again, if we're doing conventional or VA or RD or something, that won't work. But if we're doing FHA, that 203B is a great, with a repair escrow is a great option. So I kind of mentioned this, but we close. They go in, do the work, the contractor does. We got 90 days to get the work done for FHA, 2 weeks for all other programs. After the work's done, we verify it. We send the appraiser back out, verify it, and then we cut the check to the contractors, refund any extra money to the buyer. All right, so let's talk about the little bit more specific on the different programs. So the FHA 203B is the normal FHA loan. Because these are HUD homes, there's a special program called FHA 203B with a repair escrow. And it's all the same stuff as a regular FHA loan. Normally it would be 3.5% down, but because they're HUD foreclosures and they want to move them along, they have the special $100 down. We're allowed to do up to $10,000 in repairs. Those can be rolled into the loan. On the process side of it, I would just leave it'll ask for an amount when you're putting an offer in. I would leave it blank or just put a ballpark amount. Basically, we're going to get the appraisal back and actually get a list of repairs, have you get a bid from a contractor, and then we'll update the amount for the repair escrow once we know exactly what the cost is. So, and again, we're going to hold 10% extra. That extra money that's held back on the bid in this example here that I'm laying out is in case that contractor gets in there, starts doing some work, and finds other issues with the home. So, all right, so after we close, and again, just reiterating, if it's the 203B with the repair escrow, they got 90 days to get the work done, then we re-inspect, pay the contractor. If it's an RD with a repair escrow or a VA with a repair escrow, 2 weeks to get the work done. So the big difference on the time frame there. Make sure that contractor can get it done in that allotted time frame. The next option, and this is like the silver bullet option, and that's the renovation financing. So renovation loans are ideal for buyers who don't have a bunch of money to work with. The house needs a bunch of work, or there's a bunch of updates that are needed. we can do the renovation loan on FHA or conventional. So what can we use it for? It can basically be used to purchase and rehab a house. We can move houses with it. Not that you would do that on a HUD home, but we can move houses. We can do it on refinances. It's typically 3.5% down, but again, because it's a HUD home, we can do it with as little as $100 down. There's two versions of the FHA renovation loan, the limited and the standard. The limited is more your minor stuff. It's going to be $35,000 or less. The standard is going to be $35,000 or more. And if there's structural stuff, it would go into a standard automatically. Also with the standard, we got to bring in a HUD consultant that has to oversee the project. And so it's another layer of, complicatedness, but at any rate, they're both really good programs. So, and both these standard and limited are both available with $100 down. So here's some ideas for the limited and the standard. These would work, but roofs, gutters, downspouts, upgrading HVAC systems, plumbing and electrical, replacing some flooring. So stuff like that, updating a bathroom, updating a kitchen. Ineligible stuff, you can't do structural changes. If you do, it's got to be the standard, not the limited. Again, not a huge deal. Same with like landscaping and fencing, would have to be a standard, not a limited, but we could still do it. They got to start within 30 days and no luxury items. On the standard, it's basically all that other stuff that's missing. So it's going to be your structural stuff, major landscaping or site improvements that are needed. Again, both with these with $100 down. So which way we go really just depends on the property and the buyer and what everybody's looking to accomplish with it. The conventional renovation loan, same concept. You can do purchases, refis, 1 to 4 unit houses, which the FHA is good to 1 to 4 unit too. With the conventional renovation loan, second home and investment property buyers can use it. With the FHA, it's got to be a primary residence. So, and we're looking for 10%. I can get this done with 5%, and then in the investor side, I would need 20% down. We can do gift funds. This is a weird calculation that gets done. This is only going to come into play on your low price points, but the way that they calculate like the maxes, it's the price plus renovations, and the max renovation amount is 50% of the as completed value. So if the as completed value is 100K, the bid can't be more than 50,000. I've seen that only trip one person up the whole time I've been doing these, but it is a thing, and I think it's worth noting because a lot of times on the HUD homes it's lower dollar price points, lower dollar houses. But if the thing appraises at 200,000, we can have a $100,000 bid. So it really mainly comes into play on the low priced stuff. Put 20% down, you can get out of mortgage insurance. So cool program. Cool program. Lead-based paint. Lead-based paint. So normally on a normal sale, there's a lead-based paint form that everybody signs, but I hardly ever see lead-based paint testing done. Like never, hardly ever. But on the HUD homes, I see it. So what I'm going to tell you here only applies to these HUD homes, really. But it is a thing, and it's important to talk about. If somebody's getting any kind of FHA loan on one of these houses, HUD's going to test it for lead-based paint. And what they do is it goes under contract. They send a third party out there to test for the lead, and then they send the buyer a report on it. It's usually like a 24 to 40 page report. Basically, somebody goes into the house with some kind of special laser gun thing and shoots it in different spots, like 100 different spots around the house. And then they're based on that reading will tell if it's there's lead in the paint or not. So yeah, so that's what we're talking about. And here's what happens. So a lot of these are older homes, and the older homes, built, earlier than the 70s, a lot of them have lead. So if the house pops for lead, again, if it's conventional VA or RD financing, this doesn't apply. But if it's FHA financing the buyer's getting and it comes back with lead, what happens? And basically, if HUD, what will happen is HUD will get a bid on how much it'll cost to take care of the lead areas. And if the quote's 4,000 or less, HUD will just pay they'll send somebody in there, pay them, have them remediate the lead. When they remediate lead, they're scraping off some of the old paint, painting right over top of it, and that's what we're talking about. It's not a huge undertaking. If the bid's over 4,000, then HUD won't take care of it. It's too much for them. What they will do is they'll allow us to switch it over to a 203K if we're not already doing one. Have the buyer get it, and then we'll have the buyer get a bid for the painting, of which HUD will give the buyer a $4,000 credit towards it. So say we're under contract, we get the appraisal back, that's all good, but then all of a sudden HUD sends back a report saying the house has lead. HUD won't fix it because the cost is $8,000, let's say. Then I would have the buyer get a bid. We'd have the cost at $8,000 based on that bid, and then we would switch it over to a 203K, roll the $8,000 in, and the buyer would get a credit of $4,000 from HUD towards the $8,000. So the buyer would get $8,000 worth of painting done for $4,000 in my example there. So I actually like it when they pop with lead. It's usually a benefit to the buyer. They're getting a paint job free or at very low cost. So again, this is only for FHA loans. So we get the bid, customer gets a bid, HUD gives a $4,000 credit, and then that's that. That house is retested after the painting is done to make sure that all the lead is cleared. So, all right, so that's what I got on HUD Homes for you. Again, I think probably the biggest bullet point is a lot of people are scared of these. There's nothing to be scared of. There really isn't. The HUD Homes are, they're oftentimes the good bargains that are out there in this market. There's really no need to be scared of the repairs. At least if you're working with me, we've got lots of different ways to handle the repair concerns out there and make sure those deals close. I've done tons of these. So a lot of times buyers will be hearing from the realtor lender that the house isn't financeable, it's not going to work, it's not going to pass. It will pass. I got one just the other day, came in last week on my desk, and it was somebody had cut the electric main that was coming out to the house. The couple lenders were telling this customer that the house couldn't be financed. I showed her how it could, and we got the deal together for $100 down. So it really is a good program. There's lots of ways to handle the repairs. There's lots of low down payment options. It's just all around. It's not a bad program at all. So if you'd like to learn more about HUD Homes, hit me up. My phone number again is there, or you can look me up on my website, firstclassmortgageservice.com. I'm Jeremy Drolbeck. Thank you very much.